Hello traders, and welcome back to Explain the Charts. Today is October 29th, 2025, and we are turning our focus to one of the most watched currency pairs right now, the US dollar versus the Japanese yen, or USDJPY. The market is in a state of high anticipation, coiled tightly as we await major policy decisions from both the Federal Reserve and the Bank of Japan, making this a critical time to analyze the charts. First, let's cover the news driving the sentiment. The market is currently bracing for what could be a volatile 24 hours. The U.S. Federal Reserve is widely expected to deliver its second consecutive 25 basis point rate cut, a move that would typically be bearish for the dollar. However, the real story will be in the details. Traders will be scouring the Fed statement and Chair Powell's press conference for clues about a potential third cut in December and any changes to their quantitative tightening program. Interestingly, recent comments from Powell were interpreted as pushing back against overly dovish market expectations, which provided a floor for the dollar and suggests the Fed might be wary of easing too quickly. Meanwhile, across the Pacific, the Bank of Japan is expected to hold its interest rates steady tomorrow, on October 30th. While no change is the base case, the market is sensitive to any hints that the BoJ might be preparing for a rate hike later this year, possibly in December. This monetary policy divergence remains the core fundamental driver for USDJPY, a Fed that is actively cutting rates versus a BoJ that is perpetually dovish, but could surprise with hawkish language. Now, let's tie this into the technicals by looking at the daily chart. From a long-term perspective, we can see a very strong uptrend that began in mid-2024, culminating in a peak just above the 161 level in early July. Following that peak, we saw a dramatic and sharp reversal, with the price plummeting all the way down to the low 140s by early August. That fall established a major support zone around the 140 to 142 area, which has not been revisited since. From that August low, the price has carved out a clear and steady uptrend over the last several months, making a series of higher highs and higher lows. This multi-month uptrend is the dominant technical feature and provides a bullish context for the current price action. Let's zoom in on the more recent action, focusing on the period from the beginning of September 2025. As you can see, the uptrend has been persistent, finding support and continuing its climb. The pair recently broke through the significant psychological resistance at 150.00 in mid-October, a level which should now act as a key support zone. In the last week, the price has been consolidating in a range, with a clear resistance cap forming around the 153.25 level. Today's candle shows a bounce from the lower part of this recent consolidation, reinforcing the support around the 152 mark. This tightening price action just below a key resistance level is classic consolidation before a potential breakout, with the upcoming central bank meetings serving as the likely catalyst. Now, let's drill down to the 1-hour chart to get a better feel for this recent range. Here we can see the battle between buyers and sellers over the last few days much more clearly. The upper boundary of this consolidation range is very well defined near 153.25, while support has been established near 151.70. The price action today shows a distinct rebound from the lower end of this channel, climbing steadily from below 152 to its current level around 152.70. This demonstrates solid short-term buying pressure, but it remains contained within the broader consolidation pattern. Traders should watch these two levels, 153.25 and 151.70, as the boundaries that will likely define the market's immediate reaction to the news. Finally, for our intraday traders, a quick look at the 15-minute chart shows today's bullish momentum in detail. We can see the step-by-step climb throughout the trading session, consistent with short-term forecasts for slight increases. However, this time frame also highlights the choppy, sideways nature of the market, reinforcing that we are in a holding pattern. Attempting to trade breakouts on this time frame before the news is extremely risky, as volatility can spike in an instant and lead to false signals. So, let's go back to the daily chart to summarize what we're looking at for USDJPY. The key levels to watch are crystal clear. On the upside, immediate resistance is at the recent high of 153.25. A decisive break above that opens the door to psychological levels like 155.00 and longer-term forecasted resistance at 156.97. On the downside, immediate support lies at 152.00, followed by the bottom of the recent range around 151.70. Beneath that, the major psychological and technical support level is at 150.00. Now for our potential scenarios. The bullish scenario, which I see as having a roughly 65% probability, will be triggered if the Fed's statement is less dovish than expected, or if the Bank of Japan remains staunchly committed to its easy money policy. In this case, a breakout above 153.25 would be highly likely, confirming the continuation of the dominant uptrend. The bearish scenario, with a 35% probability, would require a dovish surprise from the Fed, strongly signaling more rate cuts, combined with an unexpectedly hawkish signal from the BoJ. This would likely cause a breakdown below 152.00 and 151.70, targeting the 150.00 support level as the next stop. The key thing to watch is the initial reaction to the news releases. Look for a high-volume break and a retest of either 153.25 as new support or 152.00 as new resistance to confirm the market's new direction. To recap, we are in a bullish long-term trend, but consolidating in the short term, awaiting a fundamental catalyst from the world's two most important central banks. Please remember, this analysis is for educational purposes only and is not financial advice. Trading involves significant risk, and you should always conduct your own research and analysis before making any investment decisions. If you found this breakdown useful, please hit the like button, subscribe to Explain the Charts, and share your own thoughts on USDJPY in the comments below. Thanks for watching, and we'll see you in the next one.